Well, good morning, everyone. Welcome to our Monday morning session. Start of another work week. Just one second while I get you my monitor. Having a little technical difficulty with a couple of my charts, so bear with me as I just finish loading up a few things. Computers are great when they work. All right. Okay, we've just had the opening bell, and it looks like the market is a little bit crazy right out of the gate. My goodness, very strong. Very strong to start the day. Let's see where most of that strength originated. I have a feeling a lot of that is coming out of the overnight. Well, not really. There was a little bit of a rally up in the overnight session, but I suppose that is going to look a little bit like an opening gap. We might be getting a trend change signal. I was doing a little bit of research, just trying to get a feel for what other traders are thinking about the marketplace, and almost everybody is thinking the stock indices are going to be heading lower. Of course, that's always the time that they go higher. Well, we'll give the NASDAQ a couple of minutes to shake things out. Soybeans looking a little bit, well, a little bit confused and possibly ready to head lower. Here's the soybean market. Big decline last week. Here's the overnight, not a whole lot, going a little bit sideways. We're about to generate a late filter entry signal right down near these lows. You see that? So here come soybean traders. The signal's going to print right here. You could offer up another tick, take it below the low, which might be a good idea. And it's early still, so you could always dial down that risk amount also. But there's a potential soybean trade right out of the gate. And again, you know, right out of the gate, things can be a little bit dicey. Overall, though, things looking a little bit neutral at the moment. Here's the Raptor looking to perhaps make a double pullback into the hard edge. There we go. It looks like we just need to give them a few minutes here to sort things out. Almost the first micro-macro cross signal here in the hawk. Those big opening gaps always make for difficult trading right out of the gate. All right, here is on the NQ, this is an early trend change signal that we're getting. So you'll see if we shoot a trend line across here, we've kind of broken that. So we've gotten the signal. We have an opportunity for a second push on this entry, which is probably a good idea, seeing how the market is trying to go sideways on us. Still very sideways there. The market is starting to soften up a little bit. You see this swing high here, and the eagle is held. The raptor, we're starting to get our yellow bar swings, perhaps producing a little bit lower. So we're starting to get this type of structure where we're seeing perhaps a test to the extreme. We won't know for sure, of course, until we get down below these lows and we see the reaction to breaking the lows. If you want to be on the safe side of the trade, wait for this signal right here. Yeah, the NQ's been in a long rally. Okay, so we're coming back with another signal here. And what I should do is, I'm just going to go in with a onesie. Oh, no, the signal went away. We had the warning dot there for the moment. I was going to refresh the signal. All right, well, let's just put that away for the moment then. Look at that. They are pushing a little higher, and here we're getting a with trend signal now on the eagle. The signal should print right about there. We can cover it below this swing low. Not the most exciting looking signal, I have to admit. Is it quarter to the hour? It is. You know what? Normally I tell you I take the signal, and I may end up regretting, but it is quarter to the hour. And as I've mentioned to you before, that seems to be a time where I will get the market tossing me a rather inviting looking signal that doesn't really want to go anywhere. Minor news at quarter two. Thanks, Denton. Denton says they might be getting a news report coming out in a few moments. We'll see whether that sparks some. Technically, though, folks, here on the Raptor, we're getting our double pullback and a buy signal. This is a decent buy signal on the Raptor. I know I'm going to regret not taking it. And here's a buy signal on the Eagle. That's why I said I should just dial it down. Dial down the risk amount. Oops. Or here, we'll change to manual mode. We'll throw in a 1Z. See, there's the signal. Maybe I'll get a second push on this entry. Maybe that's what I'll do. So with the second push on the entry, I simply let the bar engage and then retreat so that I know that this is the current high. And then when I think the market has backed off enough, I will throw in my order, or I'll activate my order. All right, you guys, don't you dare throw a wiffle ball at me now. Okay, so here we can duplicate the order on the Raptor. The Raptor, of course, we enter a little bit different. We enter like so. And I can set it up so that I enter just above the high of this bar, the current bar. Not the most inviting looking trades at the moment, I will confess. These are the ones where you wring your hands a little more. And we are getting a first micro-macro cross signal on the hawk. Same idea though. I think I would rather offer up a couple of ticks, perhaps frame the trade like this. Maybe I'll put a runner in just in case. So I'll enter above the high. I'll cover the trade down there for starters. All right, so our hawk trade back into yellow bars. We'll ditch that. Our raptor trade retreated back into the band, as did our eagle trade. Now I'll let the eagle trade simmer just for another bar. Okay, time to cancel that order. It's going to be another one of these days where we're getting a lot of yellow bars going on here. That does not instill a lot of confidence. So here on the hawk, I think the trading range is going to be most obvious, where we're stuck above, or we've got these highs here at 45.48. We've got the lows right down here around 45.40. That's sort of the range that we're confined to for the moment. I suppose if you wanted, you could do an OCO order just to buy above, sell below. And just wait for the market to bring you in. Well, if you have a well-defined range, that is a feasible trade scenario. All right, here we are on the Falcon now, and we're getting our trend change signal to the upside. Good morning, Jim. Jim, I was wondering if you were in the room this morning. You were a little bit quiet. James just gave us the advanced decline numbers. Hey, what's going on here? My OCO order, what happened there that the OCO order failed? All right, I'm just doing an experiment here, folks. Um, let's see, I need the OCO down here. Okay. Oh, see, now why did the OCO work this time and not the other time? That's very odd. I'll have to try that again. Um, because we had the OCO order just above here and below here. Why did that fail? I didn't see it fill. Ah, Jim says the YM is the odd man out now. It looks like the NQ and the E-mini are on the rally, and the YM is the one dragging his heels. So here we are. We've broken out of the top end of this trading range, and now we're waiting for the NQ to do our little test retest thing, right? So we've broken out, now we're testing, and now we're retesting. So we're looking for a chance to rally off of this support area. This bar with this tail, if you like, that's a good one to roll your stop underneath. Or if you prefer, you can just let the stop strategy continue to hold your position or manage your position for you. Obviously, we're seeing a little bit of a reaction to these highs here. All right, we'll let that trade simmer a little bit. Mark has a good question, and for those of you who are new to the DTS system, you might find this helpful. Mark has a question about the Eagle. He says, Eric, as a DTS newbie question, can you explain on the Eagle why some of the bars color in and some are hollow? What's the significance? I see red bars where the market turns down, green bars turn solid on downturns, and vice versa. I didn't see where this was covered in the manual or videos anywhere. Perhaps I missed it. It is covered in some, excuse me, in some of the videos. It isn't really given specific attention, however, and if you want to know the truth, it's partly cosmetic. It's partly functional, partly cosmetic. Programmers, and they're going to kill me for saying this, but programmers like to make things look pretty, and they like to make things look different. So they're saying, how in the world can we make things on the Eagle look different from the Falcon and the Hawk? So this is what they came up with. And that's part of the reason why the bar colors on the Raptor are blue and fuchsia instead of the traditional green and red. But the significance, Mark, is the hollow bars are like a traditional candlestick. In other words, if the bar is hollow, it's going to close higher than it opens. So whether the bar is green or red, a hollow bar tends to be bullish. In fact, pardon me, one of the strongest signals that we have on the Eagle is the red bar buy. Not to be confused with the red bar buy on the Hawk. This red bar buy occurs near the hard edge of the Eagle. It's red bars with a buy signal, so it will always occur on hollow red bars. The solid bars are just the opposite. The solid bars are when the market or this bar closes lower than it opens. So it's the bar itself is bearish, even though it's green. Now the bars will paint, it's programmed to pick up market momentum. So if the bars are painting green, the momentum is considered to be bullish. If the bars are printing red, the momentum is said to be bearish. However, what we discovered with the Eagle after all this programming and the way the bars were painting is, like I said, you got these little swings here where the momentum shifted ever so slightly and then came back. That's what makes this such a powerful signal. When the sellers are driving the market down and all of a sudden all the market conditions change so that now the bars are painting red, your filter has even turned red, and then all of a sudden the buyers come back and it prints a buy signal. That's what makes this so very powerful. Very similar to the first micro-macro cross signal in a way on your Hawk, where everything is all out of sync, everything is a jumble, and then everything comes into sync. So it's showing a market that is perhaps has a bias one way or perhaps no bias at all, and then all of a sudden it has a bias. So that's what the hollow bars and the solid bars on the Eagle are. It's partly cosmetic, partly functional. Solid bars tend to be bearish. Hollow bars are bullish for that bar. Green bars are bullish red bars tend to be bearish. Now, let me see if I can find you a green bar sell, which is the opposite version of the red bar buy. Well, here's one. Now, the green bar sell will occur on solid green bars, but you're printing a sell signal. This one, unfortunately, did not have much follow through, but it tends to be a fairly reliable signal, just as the red bar buy tends to be a reliable signal. Here's one. This one had a little bit better follow through. A green bar sell in a downtrend. Even though the bars have turned green, you can see the market has shifted, and then the momentum comes back to the downside. In this case, it was short-lived. The buyers took it right back and drove the market higher. And so here we are on the NQ now, still fighting the market up a bit. What are we doing profit-wise? Oh, we're up around $100. That's not too bad. Normally I would grab that. That's our first high probability profit target after all. The advance. Jim says yes. I'm going to use that, Jim. Jim says the interior decorators of code. The programmers. I like that. I am going to steal that. Each of the tools paint the bars differently according to their programming. The programming on the Falcon, it will print red and green given that the market is doing certain things. Okay, Jim says the advanced decline a little bit lopsided here. We're about 1,300 to the good, which tends to be fairly bullish. So a few more buyers in the marketplace right now. Sometimes with the Falcon too, if I see one red bar, I know I'm going to get two. So very often if I get the red bar, I'll just hop out with my profit. But I'm at break even. Maybe we'll just try to swing this one, see if we can hang on. Come on, get up there. It always amazes me, and I've been working with the DTS tools for a while, but it amazes me. Here was our 645 signal, or thereabouts. I guess it occurred right here, where everything is in sync. This is a proper with trend signal. The ATR is in our favor. I was looking at taking the signal like that. It always surprises me. Well, I shouldn't say always, but sometimes it surprises me how correct the programming is at interpreting what's going on behind the scenes. Even though this doesn't look like the most promising trade, it looks like the market is struggling. We're obviously a little bit range bound. Yet DTS figured out that, yeah, there was a little bit of a rally going on here. And worth a stab. At the very least, you could have this trade to a break-even situation. Might have a little profit taking going on at the moment. Crude oil put in a little bit of a run up. It would have been fairly difficult to get a handle on it though. Here's the hawk. You can see they spiked here. They came off of yellow bars. It spoiled our macro pullback signal, but it did develop into a 3-arrow consolidation, or if you like, a 4-arrow consolidation. So we have 1, 2, 3. Normally, crude oil, we only get 3 arrows before it rallies. And that's perhaps the only signal I will take off of yellow bars on the hawk, is the 3-arrow consolidation. I was looking elsewhere though. I was watching our NASDAQ trade. Come on, buyers. Now, if this bar turns green, I'm probably going to get a little bit more aggressive managing my stops. So let's take a look at a more aggressive stop strategy. Yeah, parabolics I think will do. So if this bar manages to turn green and the prices continue higher, I'll probably switch over to parabolics. Well, they're trying. Without much success at the moment, I'm afraid. Yeah, like Jim says, watch paint dry day. I sure hope not. We had enough of that the end of last week. All right, macro pullback signal, or the makings of a macro pullback signal. Jim says the bonds have been getting slaughtered of late. Normally that would send the stock market higher. There tends to be an inverse relationship most times between the stock market and the bond market. Just cannot get them to play nice. Okay, so macro pullback signal. The signal's going to print right here. 1, 2, 3. Got to give up 4 ticks to enter above there. Might be better to dial down the risk amount. If I took it there, where am I going to cover to? Well, the last major swing is all the way down here. We should see a test of the extreme, right? If this market fails, we should see some sort of test of the extreme. We are seeing the market retest this support area. I could also offer it up below this support area. Where does the trend line fall? If I shoot a trend line across here, that might be a good alternative, a decent compromise. Yeah, so the trend line's all the way down here. So let's say 43. And I should disengage my stops. I do have my break even, my auto break even working. They're going to just tag me at break even on the Falcon trade. That was too bad. Okay, so the macro pullback parameters have changed slightly. So we'll enter above here now. We'll cover below the trend line. And we're right into the macro line, right back to the top end of this trading range. We could see some follow through from this. I suppose it's just a question of whether we can position ourselves to hang in long enough. Now we'll see whether or not break even was a good call on this trade, or whether I should have stayed with my stop strategy. Whether the stop would have held me in long enough. Sorry. I have my mute button on. Thanks, Mark. What I just mentioned here is the late filter entry or possible late filter entry developing here in the Falcon on the NASDAQ. Come on, macro pullback. Don't fail me now. If we get above this 45.50 area, we should be okay. Come on, just give me one more bar. Come on, you know you want to. There we go. There you go. Come on, give me 51. You know you want to. Get up there. Come on. Oh, you guys are so stubborn. Get up there. Jim says the DAX is pushing. The E-mini should be in a rally mode also. Why is it always the NQ dragging their feet of late? Oh, there we go. I think I saw 51. They just kissed 45.51. Get up there, you scoundrels. Get up there. All right, well, they're not playing nice, so I'm going to roll my stop in tight. If it fails here, it fails. Yeah, there they go. Well, it might be the better thing just to take my lumps. I'm going to make a note on my journal, see if I was too quick with my stop there. But they should not have failed at 45.51. They should have broken through. And this is a macro pullback signal. It's a high probability signal. I just didn't want to ride out the pullback or try to ride out the pullback. Jim's watching the banking index. He says that the banking index is looking a little bit stronger, but generally it's a mishmash, which is pretty much what we're experiencing here as well. A little bit of this, a little bit of that. And now I'm curious, like I say, if you make changes to your trades, like I just did right here, and admittedly, I've confessed to you before that perhaps one of my faults as a trader. Eric has faults? Yes, it's true. One of my faults as a trader is that sometimes I will tweak myself out of a perfectly good trade. So right now I've got a note in my journal to see that if I had left my stops alone, would the market have rallied and found my profit objective? Or did I just tweak myself out of a good trade? I hate it when I do that. But like everybody, I much prefer a small loss to a bigger loss, even though, you know, the risk amount is always something I can afford. I try to I try to balance the two and say, okay, Eric, you can certainly afford the $130 hit or $140 hit, whatever it was. It's not the end of the world. So I probably ended up taking about half that, getting spanked for $50, $60, which isn't a lot, but it would be tragic if the market rallied from here now. Give me that macro pullback. Jim says it looks to him like the Nasdaq's getting a little bit weaker, especially relative to the Russell and the YM. The stock indices do tend to move together usually. Come on, NQ. Do I have a 4-arrow consolidation yet? 1, 2, 3. We need one more arrow here. Come on now. So I've got 1, 2, 3 signals. This is my 4-arrow consolidation. The 4th arrow hasn't printed yet. It needs to print if this signal completes above up here, which is essentially what our macro pullback was. Except the macro pullback I took a little bit earlier. This one, I'm looking to take it just above these highs, which are a couple of ticks away from the signal. The darn NQ, always got to be the odd man out. The red-headed stepchild of late. A lot of yellow bars coming in again. Not what I really want to see. See, we're still holding this support area here, which used to be the highs. That's the good news. Jim might have the right idea. He says it's turning out to be a Bloody Mary Monday. All right. Well, they're starting to shake things up a little bit now. So now we're into a red bar sell, or pardon me, red bar buy here on the NQ. Oh, all right. Forget that noise. That ain't going to happen. So they've drifted all the way back into this trading range where they were pretty happy before not to do anything. Now, it's really tricky when you're getting all these mixed signals. We're getting a first micro-macro cross lower now. We're just getting the warning dot. Haven't printed the triangle hash mark yet. I would say that entering below the low is probably the safer place. Covering above that high, good idea. We know that there was some obvious resistance at 45.51 because that's where we were looking for the market to break through, and they could not. So that would seem like a adequate stop placement. Oh, and now the macro pullback is trying to tighten up a little. Or pardon me, the macro pullback. First micro-macro cross is turning into a macro pullback. I might leave my entry just where it is. If it turns into a macro pullback, okay, I'll have to reassess things. But you see, we're into the hard edge here on the Eagle. We don't have a trend change signal yet in the Falcon. Funny thing is that overall the market is still bullish, right? If we take a longer term view, this is what we have. We have a market that is in a huge, huge rally. As you can see, according to the trend line, there is some room to move to the downside here, so it's not out of question to see a retracement or a pullback of sorts. All right, now the hawk is here into yellow bars, so we can cancel that. Here comes the eagle with our hard edge bounce. I will wait for it to turn over on the ATR, however. Now we're getting a green bar sell on the on the hawk. Oh my goodness. This really is a dog's breakfast today. Oh, thank goodness that green bar sell on the hawk turned into a yellow bar, so I don't need to worry about it. Really? Really? You're really giving me a buy signal? See, look at this. Rally back up to 45.51, fall down. All right, the Falcon and the Hawk starting to sync up a little bit. We are getting a warning dot suggesting that the market environment could be turning a little bit more bearish at the moment. Overall, we're really kind of stuck back in a sideways range though, aren't we? Kind of below these lows here around 45.43 and above these highs at 45.51. Let's see if this prints a hash mark. Once again, the safer entry would be below here, below the 45.43 area. There you go. Get up there. If you're not going to come down, then get up. And rather they spoil the signal rather than bring me into a bad trade. Our Eagle still looking a little bit bullish. Our Hawk definitely bearish. Our Falcon definitely bearish. Oh, in fact, the Hawk gave us a macro pullback signal here. Now, these aren't your choice signals, obviously. But if they ain't going to go up, they should go down. Oh, you scoundrels. Come on. Get down there. So they just tagged the Hawk order, and now they're floundering. There you go. Come on. That's it. That's it. Who's your daddy now? Okay, I think we'd better get ready to incorporate a stop strategy here. The parabolics will enable those. And we'll go to break even. There we are. Okay, so we nabbed a couple of dollars on our first target. We'll see whether or not there's some follow through here. This is where we ran into some trouble before on the lows, 45.43. Hopefully we'll see them push through, maybe even get down here to this 45.40 area, which, well, I guess the start of the day was actually down here, wasn't it? Around 45.37, it looks like. That would be a nice retracement. I could deal with that. And that should also put us in tune with the trend line here, 45.37 or thereabouts. Come on, get down there, you so-and-sos. Oh, here's Eric forgetting to submit his order again. Oh, don't tell me. Darn it. I was wondering why I didn't see my break-even stop here, or why my stops weren't rolling. It's because I forgot to hit the submit button. I get doing too many things at once. I am not a multitasker. Just ask my wife. Come on, NQ, bail. Well, they're trying. I think we had the right idea there. If we can get two bars going in the same direction. Oh, come on, get down there. Yeah, Mark says that's why I like the one-click feature of the Trailblazer, where you simply enter your order, and providing you have your stop strategy enabled. Now, this isn't a signal, folks. I'm just demonstrating. You see your profit targets are set according to what your preset profit target is. Your stops are automatically engaged. It is definitely a nice feature to have. Mark says it's too bad we can't have the risk management portion built in. And yes, it is unfortunate. I think it's just a little bit beyond the capability of most computers to accurately size you given where the stop strategy is without knowing what the stop strategy is going to be or what the initial risk will be. But you can still eyeball it. It doesn't take too long to get a feel for it and say, okay, normally this type of trade, I would get 2 contracts. So then you can set up, either to take 2 contracts on target or to have one in as a runner, and then you set your order, and now you have it all set up just as you want it. So yes, a definite bonus to the Trailblazer, having that feature built in. Oh, welcome back, Joe. Yes, I'm very sorry to hear that. Joe had a death in the family, and he's been away from trading for a while. My condolences to you and your family, Joe. That's terrible. Your father-in-law was only 58. That's tragic. Glad to see you back in the room, though, Joe. So here we are back at this bottom end of the trading range. Get on down there. Let's see if they'll drift all the way down here to 45.37, which would have been the opening price. Come on, let's go. You can do it. Come on, get down there. You can do it. So the Bulls getting slapped silly in the NQ right now. They tried to rally, no such luck. Come on, break that. Break that support. You get below here, we'll see 37 for sure. Come on. Come on. The grass is greener down here. There you go. There you go. I knew you wanted to. Get on down there. Well, it's really bummed out now that I didn't hit my submit button because, well, we would have had a very nice progression lower on the Falcon also. Oh well. There they go, 39. Oh, we're getting some resistance here at the primary resistance line. You can see the Falcon starting to bounce a little. I'll leave the parabolics in because they should hop down here next bar. If I was using the bar high-low, if this ticks up any more, I would have got stopped out on the bar high-low. Currently, we would be holding, but we could not offer it. Well, oh, there, the bar high-low would have stopped us out. Parabolic still holding us in for the moment. And now parabolics took us out. So we offered up a couple of extra ticks using the parabolic strategy. Only got as low as 45.38. I thought for sure they were going to take us all the way down to 37. Well, that's okay. That was a good trade. After a lot of humming and hawing, the market finally headed lower. I've pretty much been ignoring crude oil this morning, but that's my fault because crude oil has made a very strong move lower. I was watching it, it actually preceded the NASDAQ lower. Not that there's a correlation between crude oil and the NASDAQ, or at least not one that I'm aware of. Maybe I should be paying more attention to it. But we had this beautiful first micro-macro cross signal right here, and just the market just tanked. 50, 60 points. Boom. It does look very similar to the NQ, doesn't it? Right back down to the lows. A little bit of a run up. Wouldn't that be something if it turns out that crude oil leads the NASDAQ market? So great opportunity there in crude oil this morning also. Soybeans have been a little bit more active. I've pretty much been ignoring them also, but here are beans on the Eagle. Nice swing up out of the open, then a reversal and a move down. We didn't have any Eagle signals, but the Eagle shows you quite nicely here. We did have signals on the Falcon and the Hawk that you could have capitalized on. So here's the Hawk for the soybean market. Oh, sorry. No, they shut us out here. What was going on with that? I thought I saw a first micro-macro cross signal here. My mistake. Ooh, that's mean. We did get the signal on the Falcon, however. So here was our proper trend change signal with the Falcon shortly after the open. Nice run up, and then the early trend change signal to the downside. So that the Falcon came through. Really surprises me that we didn't see any of that on the Hawk, however. That's odd. Oh, there they go. They eventually found 37, and now they're tailing off a little bit more. Should see some sort of reaction to the 37 line. Not only is it this morning's low, but as you saw on the Eagle, it's also very close to the trend line. So we should see some buying going on there. As I mentioned earlier, I was doing a little bit of research, and a lot of people are looking for a reason to short the stock market. I think a lot of folks are thinking the stock indices are overextended, myself included. Oh, and again, the mixed up signals. Working on a possible red bar buy, which we know is a very strong signal for the eagle. Here's a macro pullback sell signal in the hawk. Well, maybe they won't tempt us with anything silly. I hope. Now that we are back at these significant lows, ideally the best course of action is to let the market break, give you this retest, which might come in the form of a macro pullback or maybe a 4-arrow consolidation, and then look for that sell signal to develop on that retest. That's going to be the most predictable setup. Now this signal here that we're seeing is definitely a macro pullback signal. However, the problem I'm having with this is, where do I risk it? Right? There's my entry. Where do I risk it? Is it going to be enough to risk it back here if the market brings me in? Ideally, I want to risk all the way up there to 45.51, but as you can see, risking only 1% of my account, I can't do that. Now, fortunately, this signal never got engaged, but this one is just as difficult. Where do I risk this? All the way up to 45.51? You know, I could do that if we see a retracement. What if I shot a trend line across the top here? Where might that fall? And so far the market's not making me make a decision, which is great. Prices just keep retreating, but you can see the problem with some of the trades. And sometimes you just have to resign yourself and say, okay, well, I'm only prepared to risk 1%. To set up this trade properly, I need to risk it at least up to, well, what if I went halfways? Well, okay, 135, that's not too bad. To do it properly, I should risk it above here. Oh, I can afford it now. I was going to say, the point I was trying to make is if Trade Manager doesn't allow you to take the trade, then sometimes you say, well, I can't take that trade. I can't afford it. Oh, a goodie. And now we're into yellow bars, so I don't even need to worry about it. Yellow bars, we don't have a consolidation yet. We have broken this little swing high. Oh, but now the eagle is making me make a decision on the red bar buy signal. Well, maybe not yet. Signal hasn't printed yet, so far so good. Everything's behaving as it should. All right, well, there's the red bar buy signal just printed. All right, what's this one going to cost me to be wrong? So there's two ways I can do this. I can either take it at the hash mark, which will flip over the ATR. I can take it above the high of this bar when it finishes forming. I can use the logic counter to forecast where that bar will finish. Given the market's turmoil, I might be inclined to take the more conservative approach, dial down the risk, wait for it to complete the bar. And the reason is we have not had a successful trade long, right? Our money today has come from selling. And normally I don't mix my trades unless I have very good reason to do so. So if the market has proven that it wants to reward me for being a seller, I will try to continue to be a seller. Even though, like I said, we do have a high probability signal here, we do need to make a decision, but I'm trying my darndest to protect myself here. So I'm going to use this full bar. This full bar has to complete, and then I will consider entering above the high of that bar. So what I'm essentially doing is this scenario here. It's the same kind of format. Here, let's roll this over. We'll pretend it's going on real time. So here's our our buy signal, but we're against the ATR. So we're still against the ATR. I'm going to let the full bar form, and then I'm going to take the signal above the high of that bar. The notion is that the more things you have in sync, the more likely it is the trade is going to work out. Now you can see it would have worked out either way, but sometimes it just gives you that little bit of a warm, fuzzy feeling. See, here's another one where we're against the ATR. This one's actually a little bit more as what we're looking at now. Wait for the ATR to flip and then enter your order. So now everything is in sync. The signal essentially is confirmed, I suppose. Oh, don't you dare sting me with this. I should actually consider going with a tighter stop strategy than the ATR here, because I don't know, right now it seems unlikely that we're going to see it challenge the highs. It's just my opinion. Jim says, Eric, put that darn first hour high on all your charts. That buy came off of the low. Yes, you're absolutely right, Jim. Here it is. Went into the first hour low, bounced. Well, things are slowing down a little bit again. They're dragging their feet a bit. We're going to button up the room here in a few minutes. If you guys are trading this afternoon, well, the stock market seems more bullish than the NASDAQ. However, it's unlikely that the NASDAQ will run away from the stock market. So if the stock market keeps going higher, they'll probably pull the NASDAQ with them. I would have been more comfortable as a seller. I think our trend is down. I think there's definitely room to the short side, maybe even to get as low as Friday's lows, which were somewhere around 45.20. It's hard to say right now whether the afternoon will shake up a little bit more or not. Crude oil, definitely, I think it's short today. I think you want to be a seller in crude. Soybeans, which we haven't looked at very much, floundering, moving a little bit sideways to short, sideways to bearish. All right, you guys, be careful. We'll catch up with you tomorrow. Talk to you then. Bye for now.